Hey y'all. So it has been a long time since I've done a sit down video, and I wanted to just kind of talk to y'all today about some little insurance stuff.
You in the past, I'm in the future. You mad that they don't salute you. I need a bag.
Thank you so much for clicking on this video. If you're new here, my name is Keela Trishan, and I make videos on lifestyle, insurance, and mental health. I also do vlogs, day in the life in the insurance industry, day in the life with a small child, all the things. If that's something that interests you, go on ahead and click that subscribe button below. Turn on your notifications so you don't miss anything from me. And if you're returning, thank you so much for coming back, and thank you for your support. All right, so this is going to be an insurance video, and I wanted to specifically talk about insurance myths. So I've been doing this for 10 years, and there are a lot of things that people think about insurance that aren't necessarily true. Some things are partial truths, and some things are just completely false. I wanted to talk about some of the most common things that I hear and, just kind of explain to you how those things work. This is good if you are an adjuster getting into the industry. If you're an adjuster that's been in the industry for a while and you share my frustration when I hear these things, or even if you're a consumer and you just want to know kind of how your policy works. So if you're interested, definitely go on ahead and stay tuned. Okay, so the first myth that I wanted to kind of debunk, it's a common misconception that if the accident or if the incident is not your fault, you do not have to pay the deductible. That is true and false. Okay. If you are going through your insurance, so I'm going to use the best example I can use is like a vehicle situation. So if you get into a car accident, it's not your fault, and you go through your insurance company to cover the damages, you are going to be responsible for your deductible. So you don't have to pay the deductible to the insurance company. A lot of people think that you actually have to physically come out of pocket to the insurance company. You actually pay this deductible to whoever's going to be fixing the damage. But the way it works is the insurance company prepares a repair estimate, and let's say it's $10,000 and you have a $500 deductible. The insurance company will pay you a $9,500 settlement, and then when you get the repairs done, you would pay that $500 to whoever is doing the fixing. Now, if you are going through your own insurance, you have a contract with your insurance company that says if anything happens that falls under this criteria, this is going to be on your declarations page, or not your declarations page, but your policy. It has to fit under that criteria. So if you have a covered claim, your portion of the claim is going to be this deductible amount, 500, 1,000, 2,000, what have you. And then the insurance company will cover the rest up to your policy limits. That is the same whether the accident or incident is your fault or not. Sometimes that's hard for people to grasp because they're like, it's not my fault. Why should I have to pay? You have to pay when you're going through your insurance. Now, the way you can get around that, it's two ways that you can get your deductible back or not have to pay it off. So if you're in a situation where, with the vehicle example, if you're in a situation where someone else is at fault, you can go through their insurance company. So if you go through their insurance company, you would essentially be filing a claim against their property damage limits, and they would be responsible for the cost of fixing your vehicle, or even if your vehicle becomes a total loss, they would be responsible for those costs up to the limits. The problem with this sometimes is that some people are underinsured. So depending on what year your vehicle is, if the person only has the minimum insurance limits, or if there's other vehicles involved and things like that, you may not get your whole settlement. You may not get everything that your vehicle is worth because you're going through that person's insurance and it's up to their limits. But that is a way to not have to pay the deductible if you don't go through your insurance. Also, if you do go through your insurance, there is a process called subrogation. So if the insurance company knows that this accident was someone else's fault, they will try to go after the responsible party's insurance. This is assuming that they have insurance. So in a perfect world, they'll go after that person's insurance, and they'll submit all of the estimates and reports that they paid on, and they'll request the full amount, including the deductible. If the insurance company is successful in getting this deductible back, you will receive a refund of that deductible on the back end. But all in all, just because you're not at fault does not mean that you're not responsible for the deductible. I want to hold your hand when I say this. That's not what that means. Okay, so the second myth that I wanted to debunk is that if you cash your insurance settlement check, you are bound to that amount. So some people believe that if I don't agree with the settlement, I shouldn't cash it because once I cash the check, that means that I agree to the settlement. So that's not what that means. As an insurance company, we are required to pay you what we know is owed, and it's called the undisputed amount. That might be a term that you'll hear in insurance. It's not a term that we typically use to insurers because it's more insurance jargon, but that's what that means. And so all in all, it's just basically like, if I know at minimum we owe you to replace a certain amount of drywall and a certain amount of flooring, I'm going to pay you for that right now until we complete our investigation. So there's a lot of things that go into the settlement. As adjusters, we are adjusters. Okay, so we have surface level knowledge of, repair techniques and all of that, and we can only write for what we see. But once a vendor comes in or a contractor, those are usually more concrete estimates because they actually do this work. They are the experts. So with that said, you'll get a minimal estimate up front if everything is not visible. So if an adjuster comes to your home when everything is visible, then you should get a more complete estimate. But if we're coming out doing a preliminary, it's going to be a preliminary amount. But then we can always issue a supplement. So what that means is that if you cash the check, you can cash the checks as you go because the insurance company is not going to ask for the money back because we're only paying you what we know we owe. So that's why I usually encourage people like, hey, if I send you this, I'm more than willing to review any counter estimates, and I can update my portion as needed as long as it makes sense and as long as it's covered. You're not bound to anything. We're not having you sign a release. That's something for another video. But if an insurance company has you sign a release, that's basically saying that you agree to that amount and that you won't come back for additional. But typically you're not being requested to sign a release in most situations. It's just we're writing the estimate based on what we know is owed. We're paying you for that, but your claim is still ongoing until we say it's closed. Okay, so the next one is not necessarily a myth. It's just kind of a way that some people handle their claims. I advise against it because you don't want to be in a situation where you aren't fully covered. But some people will go and get the repairs done to their home, and they will just submit receipts expecting to get full reimbursement. So with this, you kind of want to be careful with it. And the reason why I say that is because if you haven't talked to your adjuster about coverage or about things that, may or may not be covered, you might want to do that before just simply paying somebody to do work. Now, this isn't talking about like mitigation. So you do have a duty to protect your property and to stop damage. So for example, once you know that there's a problem, you have a duty to protect your property from further damage. So if you have a leak that you discovered, once you discovered it, you have a duty to stop it. So whether that be turning the water off, getting a plumber out to do immediate repairs, or at least a temporary repair to stop further damage, you have a duty to do that. So I'm not talking about those things, but some people will, go get like a full kitchen remodel or something, but they haven't talked to the insurance company about what's owed or given the insurance company an opportunity to review the estimate so then they can let them know like, hey, this is covered, but this is an upgrade and your policy doesn't owe that. So I always recommend before you go and pay somebody thousands and thousands of dollars, especially if you're going through an insurance claim, because most people have insurance because a lot of us aren't in a position to just pay astronomical fees if something goes wrong. If you're in a position like that and you want to make sure, I would recommend getting the estimate from your contractor in writing, having it itemized and sending it to your adjuster for review before you start anything. Like, make sure you protect your property, but don't go tearing out your kitchen or tearing out all of your floors and stuff like that, and then getting the repairs done without at least having a conversation with your insurance company. Now, at the end of the day, you can do what you want to do. And I tell people this. I'm not mean about it, but I'm just pretty direct because it comes up a lot. You can do what you want to do. This is your home. And if you feel you need to replace all this, have at it. But if you're expecting your insurance company to reimburse you for these fees, I would recommend having your adjuster or some type of insurance professional look at the documents and just go over everything so they can let you know if there's an issue before you sign on a dotted line and start tearing up your house. Because I can tell you one thing, the insurance company is not going to feel bad if you decide to do some work that wasn't covered by the policy. You're just going to be out of money. So instead of even going through that, have it reviewed and just make sure that you're, asking questions and, protecting yourself, because the reason why you have insurance is to protect yourself. So make sure that you're doing that by giving all parties an opportunity to review everything and come to an agreed upon scope. Okay, so the last myth that I'm going to discuss in this video is the idea that the insurance company wants to pay the least amount of money possible. As as a consumer, I've had claims before. Then obviously I've been an adjuster for some time. So I can understand why people think that. And what I'll say to this is there are some truths to it, but there is a bigger picture at hand. I'll kind of give an example. Now, I work in California. I do insurance claims in California. We are heavily regulated by the Department of Insurance. And I think back in the day, insurance companies were able to get away with kind of like lowballing, if I'm going to be honest. I don't know this as a fact because, I wasn't around back then, but I do think that a lot of the laws that we have now are to protect consumers because things would happen and the insurance company would review it and, not pay after you've been paying your premium for all this time, or they will give you a very small amount. These days, we are regulated. So we have a duty to pay you what we owe, not more than what we owe, not less than what we owe. We want to pay you the exact amount of what it's going to take to restore your home. Now, what happens is there's a lot of things that go into this. So you've got some homes that have not been properly maintained, but then a loss happens. The policy does not owe you to bring your home to a better condition than what it was prior to the loss. Okay? Hear me. Follow me here. The policy only owes you to bring your home back to the condition that it was right before the loss. So if you had, shitty floors, okay, and we're able to repair what was damaged only, the insurance company is going to pay for what was damaged only. Now, if you have a type of flooring where we can't replace one portion, it needs to all be replaced for, uniformity or whatever term is used by your company, then the policy will do that. But the policy is not going to cover an upgrade. So if you had carpet, the policy is going to pay for carpet. If you had wood floors, the policy is going to pay for wood floors. Speaking of wood floors, in some cases, replacement of all the floors isn't needed. You might just need a replacement of the damaged planks, and then there's a sand and refinish of the rest in order to make it uniform. So it's things like that, and I think that's where people think that the insurance company is being cheap. It's not that the insurance company is being cheap. The insurance is working exactly how it's supposed to work. It's not meant for you to gain. It's not meant for betterment. You are to be indemnified. That is a term that's used in insurance. It just basically means to make you whole. Another example I can give is, cabinets. So you have a lot of older homes that have older cabinets that haven't been updated since the 1950s. Your policy owes you for like, kind, and quality. And this is something that people sometimes don't realize, but we don't owe you for, a better material. Now, if you had cabinets from the 1950s and they got damaged, of course, whatever, new cabinets you have are going to be essentially better just because they're new, right? But the job of the insurance company is to pay you for what it would cost for something that is like the same quality in today's dollars. So, that would likely be, average grade or something of the sort. Now, if you had like special details and things like that, the policy does take those kind of things into consideration. If you had specialty construction and things like that, those are things that are taken into consideration. But I think a lot of people think that like if they have, a broken cabinet or something, they're going to get a whole new kitchen. Not necessarily. If the insurance company and vendors are able to simply replace that cabinet and make it flow with the rest of the kitchen, that's what's going to happen. So it can be kind of tricky, especially if you're in that situation, because sometimes people do use insurance claims as an opportunity to, update and do work and all that kind of stuff that they probably were planning to do, but just didn't have the money to do. And there are situations where just because of the type of damages that might happen, if you're in a situation where we owe to replace all of your cabinets because we can't match them, then yeah, you just get a new kitchen. If we need to replace all the floors, then yeah, you just get new floors. But it's not something that's automatically done. Also, the policy does not pay for what ifs. That is another thing that people get confused about. So the policy is going to pay for what we know needs to be done. I'm trying to think of a situation that baseboards. This is a big one. So baseboards, typically the policy will pay to detach and reset the baseboards if they're not damaged when we're talking about replacing floors. But depending on what type of baseboards they are, sometimes they're not able to be detached and reset because they're too brittle. So maybe, you know, we've got a vendor that says these actually will just need to be replaced because when we take them off, they're going to break. But that's because it's a known material that's going to break. There are certain materials also that if they're removed properly, they can be attached back properly. So what the insurance company will say is, right now we're going to pay for detaching and resetting them. But if they break during construction, we need to see proof and, you know, understand why they broke, and then we can consider replacement. So that's something to kind of like keep in mind. They're not going to pay for things that might happen. It has to have happened, and then the insurance company will take into consideration. So I hope that's clear. But if you have any questions on anything I just spoke about, definitely let me know. All right, you guys. So that is all that I have for you today. If you have any myths that you believe might be true or myths that you want to kind of discuss, definitely drop it in the comments. Feel free to ask for clarification. I am pretty good about getting back to my comments within a couple of days. If you guys have questions, so just let me know. And let me know if there's anything else that you want to see, any other type of like insurance video. I am planning content, and just, you know, I take all of you guys' suggestions and recommendations into consideration. If you enjoyed this video, definitely go on ahead and give it a thumbs up. That really helps with the YouTube algorithm. If you made it this far and have not subscribed, definitely go on ahead and click that subscribe button. Turn on your notifications so you don't miss anything from me. And with that being said, you guys have an amazing day, and I'll see you next time.